Professor. Today we are going to be looking at the moving averages of Verizon and Lucid Motors, as well as the MACD indicator to build a case to buy, hold, or sell each stock. The moving averages we will be looking at are the 50-day and 200-day moving averages. The MACD indicator measures the relationship between two moving averages of stock. The two moving averages represent a short-term exponential moving average and a long-term exponential moving average. Looking at the Verizon chart here, we can see that the MACD is approaching the midline, which on its own would be an indication to sell the stock. We can also see that the price line is approaching both the 50-day moving average on the bottom as well as the 200-day moving average on top. However, with Verizon's known stability, particularly when the market is bleeding profusely, I would still rate this stock as a hold for its significant bond yield and long-term stability. Looking at Lucid Motors' chart here, we can see that the MACD line has already descended beyond the indication line, giving it a firm sell indication. Although it seems to be flattening out, there is no way to know whether it will rebound or simply continue to dip. The price line for Lucid Motors is continuing to dip as investors, both institutional and recreational, are losing conviction in what was once a stock pump to over $60 per share. With the current trend of the stock combined with the fundamentals, my rating for the stock is a sell until ownership can re-earn the conviction they once possessed in the financial agreement. With the possibility of a recession on the onset, with at least hyperinflation, there's a real possibility that Lucid Motors could see depths that we haven't seen before.